A new update called GDPNow came out with their estimate as to what GDP is going to be in the US in the second quarter. It's going to shock you. I've got that and what you need to be doing about it right now. This is your next Wise Step video for today. My name's Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. If you're new to this channel, welcome. Hit that subscribe button, turn on notifications, and smash that thumbs up button. Got a lot of comments to last week's video about whether we should continue the $600 weekly unemployment add-on for the pandemic or not. Keep sending in those comments. I want to hear from you. The consensus is, big surprise, everyone thinks we should keep having the extra $600 a week. We will see. We'll see. We're certainly going to hear from Congress, I'm sure, from the Senate at some point this week. But here's the big news that caught my attention. I haven't seen anyone else talk about this. All right, so the Federal Reserve banks, there are several of them. I don't have the exact count on me, but there's several of them scattered around the U.S. The Federal Reserve Bank in Atlanta has come out with their calculation for an estimate of GDP. Now, I have to give you this disclaimer. They've created a program called GDPNow, which is basically around the idea that the gross domestic product for the quarter is such an important metric for our economic health. The problem is it's a lagging number, meaning by the time we get the information, the quarter's already done with, plus another month. We don't get the GDP number until the end of the month after the quarter's already over. So that data is stale and it's not helpful. So the smart minds, the great people over at the Atlanta Federal Reserve Bank created this assessment tool called GDPNow. And they put the disclaimer out there that this is not the official expectation of the Atlanta Fed. However, they wouldn't put it out there if they didn't have some faith in it. And it's basically a consensus of what real-time GDP expectations are from several different parties. Now, on this graph that I'm going to show you right now, they released it, I believe it was late last week, maybe Friday. The thoughts are that Wall Street or blue chip stocks or large companies are expecting GDP in the second quarter and in the US to be a negative, call it 20%, which would be just staggering. And the GDPNow forecast has been updated from assuming a negative 40-some% to a negative 51.2% in a quarter. I'm going to say that again. An actual Federal Reserve Bank has a system. So this isn't just someone in their basement somewhere is dreaming up a number, or someone heard something from someone else, and there was telephone game, bam, negative 51.2% from a non-credible source. A Federal Reserve Bank put a bunch of brain power into building a system that is trying to assess what GDP is real time. And the current forecast is negative 51.2%. Let me tell you, if you say, well, I don't know, it sounds pretty bad. I'm assuming that's bad, right? But give me some context. The worst GDP in a quarter ever apparently is negative 10%. Negative 10% is the worst GDP on record. It happened in the 50s. And we're projecting negative 51.2%. That is unbelievable. That is unbelievable. I certainly hope that's not what reality is when the quarter is done in a month. And when we get the numbers in 2 months, I certainly hope it's better than that. But I would tell you, expect to see GDP positive after that. I would tell you, and we don't know, obviously the coronavirus is going to influence this thing, but GDP is always a growth over the previous time period, and if we're going to see a drop anywhere close to negative 51%, I'd expect that we'll see some positives after that. So what do you do with this information? What should you do with it? The first one is, well, does this mean GDP is going to be in the tank forever? No, because it's growth. Therefore, if we see a huge decline in GDP, that's likely going to mean we'll see some positives thereafter, all right? So I wouldn't completely freak out and think GDP is going to be lost and gone forever. No, how they report it, this is based on growth, and because If we see such a drastic negative number, we'll see positive numbers thereafter. Second, does this mean, well, we'll definitely have a depression or we're definitely in a recession? So a depression isn't mathematically computed. Okay, so they haven't really figured out what the metric is for depression. Many would say we're already in a depression based on unemployment numbers and so on. We'll see. I guess I'm saying the verdict is still out. When they passed the CARES Act, I thought we've probably avoided a depression here. We'll see. But a recession is actually mathematically computable, and it is 2 consecutive quarters of negative GDP. We're going to have that. We had a negative quarter in the first quarter. We're going to have a negative quarter in the second quarter. We'll probably have a positive quarter in the third. So this could mean we could technically come out of recession later this year. We'll see. We'll see. Now, the next thing, and I think it's the most tempting, is when you hear someone even allude to, that is a credible source, that the GDP could be negative 51.2%, you might say, panic, I've got to sell everything. Guys, the way the stock market works is it's considered an efficient market, and even those of you that say, well, it's not perfectly efficient, would say it's reasonably efficient. As soon as someone with the mouthpiece as big as the Federal Reserve Bank of Atlanta even touts that it might be this big, that information is already making its way into prices in the stock market. So you might say, well, then why by the time you're recording this, Mike, why hasn't the market absolutely collapsed? Don't know. They're factoring in all sorts of other assumptions and analysis as they're making prices, and then they're also working on supply and demand as they're creating prices for these securities on Wall Street. So I wouldn't run out and say, well, I've got to sell everything, because if that happens, the stock market's going to crash. That information's already out there. Doesn't make any sense. It's already out there, and it's already being reflected in the prices. Now, if Wall Street is seeing that information and saying, we don't believe it, we're continuing to trade as if GDP is going to be better, well then, if we get GDP that is that bad, we'll probably see stocks roll over between now and then. But I will tell you that this information from the Fed, it's got to be already impacted prices. That information's already in prices. So if you're trying to react based off of hearing this news in the stock market, you're too late. So there again, I would tell you, you've got to have a system for managing your investments. Diversified strategy that's index-based, and have a momentum strategy that doesn't have anything international right now, doesn't have anything real estate right now, that doesn't have anything small right now, because those areas do not have momentum. Momentum is in large, it's in growth, it's in tech. And so is that where you're going to be forever? No, but that's where the momentum is, so you need to be there. And anyway, that's the process we have here. So ultimately, I sure hope the Atlanta Fed, that data, that GDPNow is off, but even if it is right, you have a system to manage and work through that, and all of that's connected to your overall financial plan. Let me know. Leave comments below. Do you think 51.2 is going to be the actual GDP for the second quarter, negative 51.2? Let me know below. You've got a different estimate, leave it below. I want to hear from you. I'll give you my own prediction as well. If we get enough other predictions, I'll share mine in the comments below as well. So there you go. That is your next wise step to take for today. If you need any help, you need to talk to a CFP, you need to work with anything on your current financial situation, call your CFP. You can always call a member of our team. Find us online, corehorn.com. That's Corehorn with a K, or send us an email, info@corehorn.com. All right, you're ready. Go out and take your next wise step in your financial life.